This modern tool I want to talk about today is designed to address nowadays more complex market dynamics. It provides a more nuanced approach to analyze market activity and sentiment, helping traders make informed decisions about whether to take a long or short position. In this video, we're going to explore exactly what this strategy is. To get it started, the first step is to go to TradingView, the trading platform we'll be using. If you need to sign up, there is a link in the video description. Once on TradingView, load the 15-minute time frame for BTC USD. For this demonstration, we'll use the Bitstamp data feed. Next, click on Indicators and type in Open Interest Inflows and Outflows. Select the one by LuxAlgo, my favorite author. Big shout out to them. The Open Interest Inflows and Outflows indicator provides deep insights into market dynamics by analyzing changes in open interest and combining this data with price sentiment. It reveals the balance between buyers and sellers in the market. This indicator offers insights into market trends, direction, and momentum. It's simple yet powerful, consisting of three main components: the histogram, the price sentiment line, and the open interest sentiment correlation. Also known as the open interest flow sentiment, measures the difference between new positions being opened, or let's say inflows, and existing positions being closed, let's call them outflows. When the histogram is above zero, it means more traders are opening new positions, indicating an increasing in market interest and potential bullish momentum. In such cases, traders should consider taking any long positions and closing any shorts. Conversely, when the bars are below zero, more traders are closing positions, signaling a decreasing in market interest and potential bearish momentum. In these situations, traders should exit long positions or focus on short trades. The gray line represents price sentiment, which assesses the balance between buying and selling pressure. When it's above zero, buyers are stronger than sellers, creating upward pressure on prices. When it falls below zero, sellers dominate, pushing prices down. The open interest sentiment correlation section shows the relationship between the histogram and another selected data source. In the indicator settings, users can choose to correlate the histogram with price sentiment, price itself, volume, or unbalanced volume. By default, it's set to price sentiment. If the correlation is above zero, it reinforces the current trend and adds extra confidence to the signals generated by the histogram. If it's below zero, it weakens those signals. Additionally, the indicator includes a table displaying money inflows and outflows as percentages. This money flow estimate approximates the capital entering or exiting a financial instrument based on open interest and price movements. The inflow percentage represents the money entering the market for the latest candle, while the outflow percentage shows the money leaving. Since these numbers apply to individual candles, they update as new candles form. The indicator settings are straightforward. For the strategy in this video, we'll use the default settings with two adjustments: disabling the open interest sentiment correlation and changing the price sentiment line to white with 100% opacity, or you can just do that to your own preference. Before diving into trade setups, it's worth noting that this indicator is based on Dr. Alexander Elder's Elder Ray concept. According to Elder, the high price of a candle represents the maximum power of buyers, while the low price represents the maximum power of sellers. A 13-period EMA is used to help us with that. Bull power measures whether buyers can drive prices above the EMA, while bear power assesses whether sellers can push prices below it. This concept plays a key role in the calculation of the open interest flow sentiment histogram and the price sentiment line. By analyzing these components, traders can identify shifts in market sentiment and momentum. For the first strategy, we'll add another indicator, the PT Market Beacon. This is a custom buy-sell indicator based on advanced price action methodologies. To configure it, double-click on the PT Market Beacon, go to the Style tab, and disable the second buy label, the sell label, BS plot, candle boxes, labels, lines, and fills. To take a long position, the first condition is to get a long signal from the PT Market Beacon. This marks our entry candle. Next, check the most recent histogram bar. It should be green, indicating an increasing in market interest and bullish momentum. The price sentiment line must also be above zero, confirming that buyers are stronger than sellers. Finally, check the table to ensure the money inflow percentage is at least 80%. If all conditions are met, enter a long trade. The stop loss should be placed at the most recent swing low. But if that's too far, aligning it with the top of the long signal label often improves the trader's success rate. The take profit should be set at 1.5 times the risk, and then you should let the trade run. And as shown in the example, it turns out to be profitable. For short positions, the process is exact opposite. Look for a short signal from the PT Market Beacon. The corresponding histogram bar should be red, indicating traders are closing long positions, signaling bearish momentum. The price sentiment line should be below zero, showing that sellers are stronger than buyers. Finally, ensure the money outflow percentage is at least 80%. If all conditions are met, enter a short trade. The stop loss should align with the bottom of the short signal label, and the take profit should be set at 1.5 times the risk. In the example trade, this setup was also profitable. The PT Market Beacon indicator is private, and access can be obtained through a link down in the description. The Chart Prime Plus option includes 2 extra indicators and 12 additional features. Alternatively, traders who already have the Pro subscription can upgrade to the lifetime plan. For those who can't purchase the PT Market Beacon but still want to use the open interest inflows and outflows indicator in a strategy, another option is to pair it with an Andean oscillator by Alex Groover. Using default settings, this oscillator generates buy signals when the blue line crosses above the orange line and sell signals when the red line crosses above the orange line. The strategy conditions remain similar. A buy signal must be present, the histogram bar must be green, the price sentiment line must be above zero, and the money inflow percentage must be at 80%. For short positions, the conditions are reversed. Though not as profitable as the PT Market Beacon strategy, this approach still yields decent results. The open interest inflows and outflows indicator is a powerful tool that goes beyond surface level price movements to reveal the underlying strength of market participants. By analyzing both open interest and price movements, traders can gain valuable insights into market trends, validate potential breakouts, and even anticipate trend reversals. This video is not financial advice, and I'm not a financial advisor, so always do your own due diligence before making trading decisions. If you found this video helpful, consider leaving a like or subscribing for more content. Thanks for watching, and see you next time.